Good evening, this is Pritesh Mehta, Senior Technical Analyst at Infoline. Now see, there has been a sense of panic, chaos on the large street. So in this video, we try and analyze and understand what exactly is taking place in Indian markets by looking into the technical charts. In front of me, I have weekly chart of Nifty index. And we'll go by a basic assumption of technical analysis, that is that history tends to repeat itself and we see it very often in the market. Without getting too much into technicalities, try and keep this video simple. So so we'll just draw a simple moving average, and we'll draw a moving average of 100 week on the weekly chart. There you have it. Yes, it's visible on the chart, quite clear, this green line, and we'll try and look into it. We'll go back to 2012. Now in 2012, from March to September, Nifty had attempted to conquer this moving average on 7 occasions. Thereafter, there was a breakout, and it went to the levels of from 5340 levels. It went to the peak of 6200, and thereafter it reversed and retested the same moving average before bouncing back and providing a strong rally towards 9119. That is the high of the index. Now, the thing which we need to observe is how this moving average works. Here it found support, and now let's go back couple of days, and during this time of recent carnage, again index has gone back to this moving average and bounced back. In fact, it has gone above 7950 in the process of pullback. So it's a strong sign that market is looking to find support. Let's go to the daily chart. Now in daily chart, we can see index prior to the recent breakdown was moving in a narrow range. It was moving a triangle pattern before providing a breakdown in last few trading sessions. There's clear destruction seen on the daily chart. Same could be seen in the weekly chart as well. Here's the weekly chart. There has been a total damage on multiple chart patterns. But again, where we are talking about an event which is very rare in Indian markets, we have not seen a fall of more than 5% in a single trading session for a long time now. So whenever we talk about such events, it is always better advice to go back and have a view from a broader perspective. So in this case, we'll take the monthly charts. Now see, in the monthly chart, we have drawn this trend line, this blue trend line. It connects the lows of 2008 and the current levels as well. Now the point is that on multiple occasions, this index took support at this trend line before bouncing back, and despite this carnage, Nifty is yet to break below this trend line. There is strong support line around 7500 levels. So there is still hope prevailing for the bulls. I don't think there is any concern for the markets, because we are definitely trading well above this support line. Now let me take you back to the weekly chart. Yes, we mentioned earlier there was sense of panic around 6200 way back in May 2013. Thereafter we made a low of somewhere close to 5100, and there you can see the red candlestick chart pattern. Yes, in candlestick terms, it is a long-legged doji. It means there is a exhaustion of the selling pressure, and that the market is bound to reverse, and it did provide a reversal. In the lows of 5100, it made a peak of 9119, and despite this strong rally, we had not seen any meaningful retracement. So the recent fall, the sharp correction, could just be an attempt by the market to get back to its moving averages. There is nothing wrong with that. Just to make it simple, we draw a simple retracement here from the lows connecting the highs. There you have it. And if you go and just look at this level, this is 38.2% retracement of the entire up move. Yes, this level coincides with the support of 100 weekly moving average. To sum it up, what we have seen in last 4 minutes, there are multiple supports placed around 7500, 7700 levels. As an investor, we should be looking to buy this market. Now see, daily and weekly charts are looking terrible, but there is still some hope prevailing on the monthly chart. So make the best use of this recent decline. Thank you.